Hey traders, it's Chris Vermeulen from the Technical Traders with another exclusive for FXEmpire. Now take a look at the SP 500 chart here. This is the daily of the futures, and you can see we've got a big rotation to the downside. Now, about a week ago, I talked about this rising wedge formation, which signals generally a very explosive move. Rising wedges and falling wedges are very difficult to trade because they can break either direction very quickly. And when you do get the sentiment that we have at this level, along with resistance from there, you can't see it on this chart, but there is during regular trading hours, there's a big gap here. We have a resistance level through here as well. When all these things are met, when price gets there, usually it's a major resistance zone, and a blow off top is usually likely to happen. Now, I talked about this in a video where I'll post a link to it, but more or less, this is a video I did talking about right after we had the crash in the market. I talked about we're looking for a 30+% rally in the stock market before we potentially go much lower into a bear market. And so this whole play now has completely happened, and it's unfolded. And if we zoom into the 30-minute chart, now last Friday I talked about the big pop, the big gap that we had in a move. It gapped above resistance. It was based on news, which is not good as well. And the sentiment was just screaming that everyone was covering their shorts and then chasing prices higher. Anyone who wasn't in the market pretty much got sucked into the market to buy. They threw in the towel and said, listen, I can't hold out anymore. I have to buy stocks. That's what's happened over the last few trading sessions. Now, this is a 30-minute chart, regular trading hours only. So we've got the close of the previous day, and we can see the open at 9:30 the next day. Well, it's created this exhaustion blow-off top that I talked about. And now we got this island topping formation where there is really blue skies kind of between here and here. Typically, gaps get filled. So we really have kind of a double gap window here that we could see a rally back up to fill those gaps before it potentially goes lower, but this is very much so a very bearish sign in the market. We got bad news out today, COVID spiking in 21 states, which is to be expected. I don't know how it's a surprise to anyone. It's even been kind of in the news, slowly talked about that COVID is on the climb again, but more or less one headline news is enough to shake the market right up, and we're seeing a big sell-off in the market. Now, in this video, I talked about it. Let's just pull it up real quick. I went over the market sentiment of where we are in the grand scheme of things. It's a little small. I'm kind of doing a video of a video, but what we're looking at here is simply that we've got this, we're in this complacency stage in the market. We've had the first break, and everyone, complacency means they think that the correction is over. They think it's just a healthy correction. The stock market should continue to rally. Well, the reality is fundamentals aren't there. The technicals are breaking down. And this bounce, when it loses its momentum to the upside, we are probably going into some type of big bear market, and it's going to make this first drop look like child's play compared to what we've seen. The Fed's kind of losing a little bit of control in terms of they can't really control COVID so much unless they close things down, or the governments. And of course, if they close things down, that is just going to fuel on more selling. Earnings will be worse. Means more fiscal stimulus. There will be some pros out of this, which printing to infinity and beyond more or less should be good for precious metals. And we could see those and the miners potentially really buck the trend and extend. This could be the golden kind of signal, or the Goldilocks zone for gold to move higher, where it's fear in the markets globally, not just in the US, printing around the world of all kinds of currencies. I mean, we're talking about potentially the perfect storm for precious metals, and the worst possible storm for the stock market. Not only are earnings going to be bad, but I mean, being forced to potentially close the markets and businesses again, like that's the worst thing you could do, because shares are valued on more or less earnings per share. And obviously, if they can't sell anything, earnings are going to drop. So this is kind of where we are, and I talk about it in this video. Again, I'll link to it below. But let's move on to the next chart. This is a video I did. I did this one actually last Friday, talking about how we are about to see this rising wedge turn into a pop above resistance. And that break of resistance and the break out of this rising wedge was going to create this very emotional trading range, which we saw last Friday and really for the last 3 or 4 sessions as everyone chased prices higher, people covered their shorts, and that's what we've seen. Overall, all kinds of other indicators which are shown in this video we're also screaming that expect a blow off, a couple percent to the upside, everyone to scramble, and then for it to start to reverse. And of course, that brings us where we are today on the daily chart. We are potentially starting the next big decline. And you never know. We could go down for this double dip. We may just come down somewhere into this range over here, 2,800, 2,900. We'll have to see. You never know where the market is going to go. Now, we did play this rally. We played this to the upside. We actually got long bonds, which went completely ballistic in our favor when the stock market crashed because we saw weakness in the 6 other markets, the internals that we watch. We were seeing all kinds of money shift towards bonds, and we got out of the index. We got long bonds for the move. We were expecting a pullback, something similar to this, maybe not quite as much, but we weren't expecting this huge drop. And that's where technical analysis comes in, and risk and money management is you need to follow the price. You don't pick bottoms, you don't pick tops. This sure may be a top. It sure looks and feels like it. This sure looked like a bottom and felt like it. But the key is to catch the trends with controlled risk and not just throwing a dart at it, hoping for some huge momentum move and to say, hey, I nailed the top or I nailed the bottom. I could really care less if I hit the top or bottom. It'd be nice. But the key is to make consistent gains in your portfolio. And so we might see the market stutter and chatter or bounce up to fill. There's a gap window through here. You don't see it on the daily chart, but we might see the market have a bounce up, and there's potential this could start to sell off, and there could be a lot of downside. And a double bottom here is potential. A whole new low is start of a bear market. There is potential. We got elections coming. Things are going to be pretty crazy. So if they start closing businesses or postponing openings of businesses and services, that is going to be lights out for the stock market. And everything that's been unfolding here, back to that market sentiment, we're in this complacency phase that we called this back when the market was trading somewhere over here. We said, hey, look for a 30+% move. This will be to suck everyone in, and then more or less the market, once all the people are long, then it's probably going to collapse, and everyone will have thought they bought in the start of a new bull market, but really they bought at the top of a bear market. And that's what we're looking at going forward. So we've been calling it play by play. We called this market move to the upside. We called this reversal here a couple days ago, talking about a pop and then a sharp reversal. Now we need to see if we're going to get some type of signal for a downward move, and we could potentially see gold and bonds rocket, stocks collapse, and there's probably going to be some pretty good setups over the next few weeks as these things unfold. Anyways, take care. Bye-bye.